Hello and welcome to the Internet of Things Made Simple. I'm Larry by Humor. This is mini episode 22. Many thanks for joining us. As always, shout out to our new listeners. Welcome to the first step in growing your knowledge base of IoT. I've been asked a few times, I wanted to start off with this, who is this podcast for? My answer is kind of simply is that it's for those who want to learn more about IoT. And that's kind of a broad category. It could be someone who's just starting out, maybe a cell carrier or a dealer who sells IoT and they want to be more informed. It could be someone that's working at a company who's just starting to embark on their own IoT journey. Maybe your spouse or family member works in IoT and you want to understand what the heck they do for a living. Or maybe you're just concerned that IoT is changing the world and you want to know more about why and how. As I've said before, if you're looking for a very nerdy description of how IoT works, this is not likely the place for you. We try to break things down that are very complex into easy to understand examples and maybe throw in the odd joke or 1980s movies or TV reference along the way. Finally, before we get kicked off today, I always ask two things. Check out our webpage, theinternetofThingsMadeSimple.com, which has some great material on IoT, blog posts I've written, some links to other podcasts, links to the book, stuff like that. And secondly, kindly subscribe to this podcast using your favorite podcast service. If that service happens to allow you to leave comments, like an Apple podcast or Google, kindly do so. Today we're going to cover something we often love to hate as a group, insurance. The idea of protecting yourself and or your business against a large disaster does make a lot of sense, both from a peace of mind standpoint and from a financial liability one. However, I don't know anyone that likes paying that bill each month or year. Like many other industries, insurance works on numbers, specifically data. The idea of trying to calculate the risk of an event happening, think hurricane or a car accident, is daunting. But if you have enough data that's useful, you can take some of the guesswork out of doing so. And as I always say, IoT is all about data, so it shouldn't shock you that the insurance industry has been longtime users of IoT and will do so even more in the future. Over the next few minutes, we're going to cover how IoT is helping the insurance business take risk and cost out of their business, and how it is helping them deal with issues like the increasing level of large disasters proven to be costly in the last few years. We will also cover how it is taking the complexity and paperwork out of underwriting and dealing with claims. Now, before I get started, who doesn't know and love Flow? For those of you living outside of North America, you likely have no idea who the heck I'm talking about. Flow is a spokesperson for Progressive Insurance, which has a commonly used product known as Snapshot. Snapshot is a self-contained cellular-enabled device that powers the industry known as UBI, or usage-based insurance, which is the first example we're going to cover today. This little device can be great for your auto insurance rates, or really bad, depending on how you drive. This device snaps into what's referred to as the OBD2 port, or onboard diagnostic port. Don't worry, that's as nerdy as we get here. This port is located by your left knee on most passenger vehicles. As I've stated before, modern cars are basically drivable computers, in that there's so much data being produced each second that you drive. These little devices are able to sort through all of that data to gather what is needed to get a true snapshot, pardon the pun, of not only how you drive, but other key information. If you tend to accelerate or brake hard an awful lot, this is picked up. If you tend to drive mostly at night and in high crime neighborhoods, they're going to pick that up too. And if you tend to drive a lot or a little, that's also picked up. I think you kind of get the point. The insurance company, in this case Progressive, is able to combine this information with other information about you, like your driving history, type of car you have, to get a much more detailed risk analysis for you. This can often lead to lower insurance rates for many, as well as the ability to offer unique plans, like paying for your insurance per mile or kilometer driven. Are there security issues? Absolutely. This information could be used to help thieves who would not only know where your car is, they may also learn when you're not at home to break into your house as well. However, rest assured, extreme caution is taken by the insurance companies to help mitigate this risk. The second example uses a relatively new device that's become increasingly important in our day-to-day lives, the wearable. For the purposes of this podcast, you can lump in those do-it-yourself smart health devices into the same category. If you take your blood pressure at home each morning using a smart BP cuff, you can add that in here as well. When you wear a smartwatch, pendant, or any other form factor, there's a lot of great information that is generated by these devices that is of value to the insurance company. The first has to do with obtaining health insurance quotes. Most of the developed world uses some sort of public health care, but even many of those locations use some private insurance coverage for other aspects. Information like your resting heart rate, blood pressure, and your level of activity can give a great indication as to your overall health. It also helps to solve a problem we've spoken about in the past in podcasts, referred to as white coat hypertension. Simply, you could have a great resting heart rate at home or blood pressure, and then the second you get into the doctor's office, it just spikes because you get nervous or anxious. Since the doctor can only use what they see, they have to log that elevated heart rate or blood pressure down on your insurance form, unnecessarily costing you more for your insurance. The wearing of a wearable also reduces the upfront clerical work of underwriting insurance, such as to the point that many insurance companies are using wearables as their primary assessment tool. As well, many offer reduced insurance rates for regular users of wearables, the thinking that anyone who focuses on things like blood pressure and their level of exercise tends to be a lower risk for major illness. This is basically the same for life insurance. Many companies like these devices as a way to lower down premiums for existing customers who may feel the need to look elsewhere after losing weight or improving the level of fitness. This is kind of similar to those car insurance policies where you might get cash back for a year of not having an accident. In this case, you get a bonus if you're able to keep your resting heart rate to a certain level or maintain a particular level of activity on average. The first 2 points cover 2 common things that we insure: our health and our car. The third one is more broad in scope, as it talks about how insurance companies are using IoT to keep track of larger assets, like expensive shipments of products, buildings, and even your home. Similar to your car, insurance companies often offer discounts if IoT solutions are used, including ones that help keep your home or business more secure. Think video cameras, smart locks, auto shut-off services for your water, and to keep it updated. One example here is to ensure proper maintenance is done, like changing batteries and smoke alarms. This also is true for assets that are used to secure loans and financing. Could be your inventory, a building, or anything else. The last thing I want to mention here is the introduction of lower-cost cellular tracking devices, powered by CAD-M, NB-IoT, and other technologies. These will make it more financially attractive to track even more and more devices and assets. We have plenty of older podcasts which go over these technologies in much, much more detail if you're interested. Number 4 is something you might not necessarily associate with insurance, but you probably should, and that's how it makes inspections easier. Think of something boring. I'm going to use the example of a large water tower that you see in many towns. In addition to making sure that it functions properly, which is kind of important, inspections are also needed to be done to satisfy insurance requirements. However, inspecting these things is quite the pain. Ton of scaffolding that has to be done and many other things, ladders, you name it, and it can take a lot of time and effort to set it up. Enter in the drone. Drones are now being used to inspect things like water towers quickly and safely. They're also proving to be ideal for remote assets like pipelines and for assets where it might pose a risk to do an inspection like a mine. In addition to drones, sensors and other IoT devices are also used to gather information to prevent large issues from happening at these locations and at these sites. One of the most costly things for insurance companies, as you can imagine, is when they have to pay out money. Sure, it's what they need to do. They are paid, after all, to cover these expenses, but it's in the best interest of the insurance company to minimize the cost of a payout, which is point number 5. One way they do this is to make it easier to gather information about a claim, and they're doing this using a tool that most teenagers would rather forget their pants than leave at home: your smartphone. Using technologies that are on board the phone, namely cellular connectivity for real-time information, GPS for locations, and of course the camera, they're able to reduce the clerical work involved in many insurance claims by up to 90%. The 6th point is one that might be controversial to some people. And this is how insurance companies are dealing with the changing climate that's happening every day. Now, I don't care what you believe is causing the weather to change, but the numbers don't lie. Storms are getting worse, floods are getting more prevalent, and the cost of insuring disasters is increasing quickly each year. So again, I don't care why you think it's happening, whether it's man-made or not. The reality is it is happening. So insurance companies need to do more to gather information. They're doing so a few ways. Sensor data helps to provide more warning to prevent unwanted damage. It also helps to minimize the loss of life. These solutions, as well as others, allow the insurance companies to better price the risk of insuring items in key risk areas. And this may offer them the ability to keep on offering flood insurance to flood-prone areas, something that they might not want to do now. In a future podcast, we're going to cover more ways that IoT is helping us deal with our changing climate. Watch for this in September. The final point is something that I hinted at in the last podcast, and that's insuring self-driving cars. To date, insurance companies are struggling with how to measure the cost of insuring these vehicles. Most vehicles today offer some sort of semi-autonomous features to help the driver avoid an accident. They can park themselves, they'll brake themselves, they'll have automated cruise control. These things all help to make you safer, and that's a good thing, and that usually reduces the overall cost of insurance. But what do you do with something like Tesla's autopilot mode? Insurance companies simply don't have enough data to be able to properly price this risk. Try saying that fast. The funny part about that, though, is I pointed out in one of our preview episodes, Tesla's own data shows that their auto mode has accidents 6 times less than the average driver. If you're interested as to how they determine that, tune in to that preview episode. I think it's number 4. One thing to ponder, though, once we go fully autonomous, is there going to be a different rate for insurance based on the car, and is this going to be a selling point? Today, you might hear a car company bragging about the lower cost of ownership for their car over a 5-year period. If the car uses less gas and has less costly maintenance, it's going to cost you less than comparable cars. I wonder if car companies are going to find out how their insurance rates vary on autonomous cars and use this to their advantage. I have to imagine they will. Before we sign off, I wanted to remind you that July is Smart Home Month, where we're going to cover things like how solutions can help those with disabilities and the elderly live safer in their home, the effectiveness of smart home devices like lights, thermostat, and smart plugs, the good and bad of smart assistants like Alexa and Siri, and the big one, what you need to do to secure your home, and are you truly more secure using smart home than if you didn't? The answer might surprise you. As always, many thanks for listening. I'd love to hear what you think, good, bad, and even ugly. The best place to start to reach out to us is our Facebook page, The Internet of Things Made Simple. Go figure. We also have links to previous material there as well. If I'm personally connected to you on LinkedIn, drop me a note that way. And if we're personally connected the old-fashioned way, like email or text, send me a note that way as well. Thanks again for listening. I'm Larry Bohumor. Take care.